And we're live. Okay, good morning, everyone, and welcome to another episode of the Crypto Hour. It's kind of like a lot going on in crypto, as you may well imagine, over the past few days and couple of weeks. So today we'll be concentrating a little bit of the fallout of the FTX debacle very recently, but also, as usual, we also look at the macroeconomic picture to see what the way out may be about this whole situation, about what's going on in the US. In the UK, we had the autumn budget yesterday, so we will look at the implications of that too. Okay, so let's start straight away. Let me start sharing my screen. Okay. Zoom calendar. Okay. Let's go on the calendar. So this is the just generally the economic calendar for this week. So we can have a look roughly about the main pieces of news. And in a way, I've used Forex Factory, by the way, but there's many economic calendars that you can use, and you can filter them so that they represent your own timeline here. So this is in the times over here are in like UK time, but wherever you are in the world, you can change that to your own time frame, so you know when news are being released. Especially if you do a little bit of trading, you need to be aware of when main pieces of news are being released, because those are things that can move the markets. And generally speaking, you do concentrate on the red announcements, and those are more important, so to speak. It's kind of like a traffic light system. So red, orange, amber, and yellow. Sorry, just a second. So the red being the most important, and the orange and the yellow. Okay, so this week the main things that we've had, if really, even the red ones, some are more relevant, some are less relevant, but there's two conflicting manufacturing indexes. Okay, so generally this is, so if you want to know what a particular review piece of news is talking about, just click on this, and it opens this and tell you what, in this case, is a diffusion index based on surveyed manufacturers in New York State. Okay. And again, you can read, why it matters, why traders care, and so on. So let me close that. So we got the manufacturing index that showed numbers that were better than expected, because any number, say above zero, it means it's a positive, and below zero in this case is a negative. And also produces price inflation. So that is, let's say, basically remain close to zero, so kind of like a stagnant producer prices, slightly growing up slightly, a bit less than expected, so a bit less. So it's in a way, this is good news, because although the increase in producing prices might be a sign of good economic activity, but at the end of the day, we are fighting against inflation. So a reduced number, it means that there is a reduced producer prices inflation, which is a positive, even if sometimes it can be confusing. You see this number in red, seems that it's a negative. The other things that are kind of like a good news from the retail sales in the US, and as you can imagine, when you look at this, the main pieces of news that we concentrate on, the largest market is the US. So those are the kind of the one that we pay a little bit more attention to, rather than anything that can come out of Canada, other smaller countries, even the UK. Okay, so the retail sales are actually being a bit stronger than expected at 1.3%. That's a good thing. And but this is kind of like quite a bad sign, because this is what the manufacturers are reporting, kind of what they expect on, again, I open here. So this is a survey of manufacturers in Philadelphia. So it's how above zero indicates improving market conditions, below indicates worsening conditions. Okay, so it's because these businesses react quickly with the kind of like goods that they produce. to the improving of or worsening market conditions. So obviously, if the market is doing well, they produce more. If the market is doing badly, they produce less. And this reading is quite bad, actually. So 3 times as bad as what was expected. So obviously, negative is bad anyway. It was expected a reading of 6, and now we're almost like a 20. So you can imagine kind of like going a little bit. It actually spells is a front runner for incoming recession, really, because manufacturers are getting ready for their demand worsening, and so they adapting the stocks, the product they produce, and reducing the number of products that they put onto the markets. I say nothing major here from today expected for today, but obviously the kind of like the big announcement this week was the budget statement in the UK. In the autumn statement, and we'll have a look at a second at the because this is as well, it's relevant because every country now is trying to control inflation, and they're trying to look like they know what they're doing, which would be nice for us to think of politicians so that we can trust them. Unfortunately, they don't, but they like to appear as if they do. I'll just cover this very, very quickly, okay? So the UK economy is already in recession. They like to say, the numbers, they show that the economy will grow by 4%, but this is on the background that the actually in 2020 went down like 11%. So 11% 2020. Last year they grew by 7.5%, and this year is projected to grow by 4%. Now, that means that we still haven't got back to the level that we were at before 2020. So even if they say, great, the economy is growing at 4%, but we actually just making up for lost ground at this stage. So this situation, as we will see, for users and citizens is much worse, personal situation, and the economy is no better than what it was a couple of years ago, actually considerably worse. So the projections are the GDP also will then shrink by 1.4% next year, before rising by 1.3% in 2024. So that means that even by the end of 2024, we still will not have recovered the ground of, basically, we'll still not be at where we were at the end of 2019. Okay, so this is translation of these numbers that sometimes can be confusing, because these guys will love to tell you, look, the economy is growing by 4%, or last year it grew by 7%. Yeah, but this is because the UK was the largest drop in GDP of all industrialized countries. So you can imagine these numbers don't mean much in isolation. So you always need to put them in context. And the other thing, by the way, also just take these numbers with a pinch of salt, because only a few months ago, the Office of Budget Responsibility had estimated that the economy would have grown by 1.8% in 2023. Now it's talking about dropping by 1.4%. So that's a swing of more than 3%, and this is just like in 6 months' time. Okay, well, the big news are kind of like in borrowing, and this is quite shocking actually to see in black and white. Okay, but so I'm going to say borrowing will be 7% of GDP. But this is kind of like interesting. Okay, so this is this is not the government estimate. This is the Office for Budget Responsibility, which is independent. Okay, so the budget deficit, the gap between spending and income, is 177 billion. So that means, imagine, like for a country, that is basically they are borrowing 177 billion on their credit card. So this is a translation of how it will be for me and you. So that means we're spending money that they don't have. And the good thing is, well, again, looking at it from March, 6 months ago, the estimate was 99 billion. So this is kind of almost doubled 6 months later. The actual, the kind of borrowing on the government credit card is almost doubled in 6 months. This shows you how, what a shamble the UK government has been in 2022, and I can imagine this is the third prime minister we have in kind of like in 6 months, and this is the result of it. Okay, so again, this level of debt, and this is kind of their best number. So if everything that they are saying comes true, it means that we still be, and this is the highest level that the GDP has been, the debt compared to GDP has been since the Second World War, and this will carry on for another 5 years at the very least. Okay, so no prospect of that improving, and we're not talking about numbers, because obviously the numbers will get bigger, but it's the GDP is expected to grow as well. So doing a ratio, it basically takes away the inflation, but it's saying that we're staying at these elevated levels of borrowing for at least, and they say that probably it will go down by 0.3% in 5 years' time. Really? Okay. And on the back of all this, basically increase spending and making this basically the debt that as a country we're carrying on our back. So for every citizen, the amount of the debt they carry on their back growing all the time. That's on one part of the equation. On the other part of the equation, we got higher taxes, and this is kind of like almost the biggest announcement. So a range of tax threshold freezes, and this is how the guys. This is happens all over the world, by the way. This is how they get your cash without you even realizing. So what happens is that we got 10% inflation. So somebody that, let's say, is earning, somebody earns really well, £100,000 a year. So next year should be, if everything goes, according to inflation, 110. Okay, but the tax threshold at which they pay taxes doesn't rise with that. So you still go into the next layer of tax rate at the same point in nominal terms. So if in the UK, like you get onto, for example, 40% tax above, I think it's about like something like £40,000, it's still, that level is still there. It doesn't grow with inflation. So that means that more and more people will pay a higher rate of tax simply because they have gone past that threshold, which will not change until 2028. So that means that in 5 years' time, if you think that inflation will carry on, at I say a certain level, I'm not saying they carry on at 11%, but even like 3, 4, 5% a year for 5 years, that means that in 5 years' time, there's going to be a huge number of people that were on a lower band of tax now paying the higher band. Okay, which obviously means at the end of the day that people will have less money in their pocket to spend. Okay, so other things that have been announced, like the highest rate of tax that was up to the people that earn more than £150,000 a year. Now that band has been lowered from 150 to 125. So other good news, like you have to, electric vehicles were exempt from tax. Now, from 2025, you're going to start taxes on electric vehicles as well. So, and other things like they cut allowances on capital gains tax and so on. So it's basically this announcement makes it that for a whole generation, it's been the lowest level of disposable income that they've ever had. Okay, so this is at the end of the day without going into all the single details, because it's beyond the scope of this thing. But so what we're saying is that generally, for general people living in the UK, will have less money to spend. Simple. Oh, the other thing, the other good news, council tax is what a tax that is connected to your property. So you pay for paying for your garbage collection and so on, and things like council services will grow by 5% across the board. Okay, so that's all these extra costs that everybody has, apart from spending more money on the food, etc., with inflation going up. We're going to be clobbered quite heavily. And this is kind of like also to realize when the government gives away money, like for example during the pandemic, and with the furlough payments, so everybody still receive money even if they're not at work, turning up for work. But basically, it's just they are lending you your own money. This is how you can see it. They're not giving you anything. They're lending you money that by making your money that you hold less valuable, they make more of it and give it back to you. Okay, so that's the thing. That's the only thing that a government can do. because they can't get money anywhere else. They're spending already more than what they get in taxes, is by making your money less valuable. So there is more for them to spend and to look like they're giving away something, but really they're taking money, they're giving you money, and then with the other hand they're taking it out of your pocket. Okay, so this is the way the unfortunately Keynesian economic work, and the only way to actually, in a way, to make it work is what Germany have done for so many years. For example, controlling the money inflation, so that it only increase the amount of money in circulation when the economy is growing. So basically, the amount of money for each good that is produced stays roughly around the same. And so that's why Germany has been so successful for so many years as an economy, because they maintained the level of the currency inflation under strict control for so many years, where other countries have been more liberal, like in the UK. You can see their relative position to one against the other over 20, 30 years, and it's really stark to see. Kind of almost like worth half. The UK is worth, in German terms, about half of what it was worth about 25 years ago. So just bear that in mind, okay? And like this, why these things matter. I mean, obviously, we can control as citizens how the country's finances are being managed, but we do have some ability to move our savings and our investments around, so that they are in a place where they are safeguarded more than maybe where we happen to live. Okay, so what's been the big thing about this week, obviously, was the fall of FTX. There's now filed for bankruptcy. Okay, so we'll see what effect it has had in the markets. And this is, as usual, is that kind of like Bitcoin. So this is the effect. This is an hourly chart. So let me just close this and move this so I can see the dates. Okay, so you can see the huge drop that there has been. We actually touched, as I was saying, kind of like last time, that we touched this level of about 21.5 a couple of weeks ago, and it was expected to drop anyway. But this is what happened then. With the demise of FTX, the whole crypto sector collapsed in a way, and lost almost like 20% in a very short period of time, as you can see with this drop. And then it's been slowly just kind of like licking his wounds, if we can call it, at the moment, and it's reached a new low of 15,500 now. With seems to be, as you can say, the past week or so has been moving sideways between 16 and 18,000, really. Okay, but it's no way. So at the moment, we're still waiting for the full fallout of the FTX, which, by the way, was the second largest exchange in terms of volumes. So it's a big drop for many reasons, not just because it's a scandal, so everybody loses trust in crypto in general, even with projects that have nothing to do with FTX. So you lose that trust, number one. Secondly, FTX, and we can see, we read in a moment, they were involved in some outright scams in a way, and with their structure and the way they operated. And so, but also they finance many different crypto projects. Okay, so those projects now are not receiving finance from them anymore. So we'll see they either going to have to lay people off or close altogether, and et cetera, et cetera. So the big impact, big ripple effect of what they're doing. But the third thing, most important for the crypto market, is that FTX was probably one of the main exchanges used by traders. Okay, so what traders, even if they do lots of trades, they buy, they sell, they buy and sell. So what they're doing by doing that, they provide liquidity to the market. Because if you just say, if you're a normal user and maybe you want to just buy some Bitcoin or sell some Bitcoin, once in a week or in a month, there is always somebody there to actually be on the other side of your trades. by FTX closing down, and a lot of traders actually have their funds stuck in FTX and they can't take them out now. They have to wait for the bankruptcy proceedings. So by that happening, it means that they are not doing their normal, they're not circulating their cash, they are not providing liquidity to the market. So this liquidity to the market has been reduced as well as a result of this. Okay, so there are many ripple effects of all this, and I think it's something that will need to be digested by the market in general before it's, you know, it starts then moving on from this, because it will move on. This is not, you know, it's not the end of the crypto market, but it's just a big shock that needs to be worked through the numbers. So before we actually go into FTX, there's something I wanted to, as usual, securities probably at the moment, as you realize this year we've had you know, FTX, we had Voyager, and we had Celsius, 3 of the kind of top 10 exchanges going bust. Okay, so that should make you realize something, that security is important. It's important that you take charge of your own, if you have any significant crypto investments, that you keep them safe. Okay, and regarding this, there's a scam that's making the rounds, and I wanted to make you aware of it. So this scam is connected to MetaMask and to the iPhone. Okay, now if you have the iPhone and you have iCloud backup, okay, and you have MetaMask on your iPhone, then iCloud will back up your seed phrase as well. Okay, so the seed phrase is what you need to recreate your you know, your MetaMask and install it onto a different device. Okay, so it's somebody that has got your seed phrase, basically, as they can do what they want with your account. Now, what is happening, what the scam was like, is that the scam artist, they're sending messages and calling people to reset their Apple ID, and then asking them, so when you do that, you obtain a 2-factor authentication code by Apple sent to your phone. Then the scammers would ask this code, and then once they have the code, they can then prove to Apple that they are the main users, and they can recreate the iCloud account on a different device. Once they got the iCloud account, then they can get the backup, and if you got iCloud backup installed, and then from that they can get the seed phrase for your MetaMask and then steal all your crypto. Okay, so the thing that how it worked is that apparently this guy, this Domenic Iacovone, received multiple cell phone messages. This is in April, asking him to reset his Apple ID password, and then received a call from something that obviously on his phone looked like Apple. In the afternoon, then they were saying that his Apple ID showed suspicious activity, and asked him to reset his password. Okay, and then asked him for the one-time verification code. Now, when he gave them the code, this basically gave them they could prove then that they were the owner of this Apple ID. Okay, then copied his MetaMask and they emptied it. So this is what you got to remember, that security is important, not just in crypto, but also in everything you do. So be very careful with any message, text message that will ask you to, and email, they will ask you to use links. So never use links, even if you think that this is genuine. Then if you think that this is genuinely Apple, then don't use a link, but call Apple and ask them if there is a genuine problem and if you need to do anything. So don't just take action on links that are sent to you. So so these are the kind of recommendations. This is from MetaMask. If you are an Apple user, you follow these steps. Go to your settings, your profile, and your iCloud, and then manage storage. Okay, on backup, when you click on backups, you can turn off the MetaMask backup function. Okay. And once you do that, then obviously your MetaMask seed phrase will not be stored on iCloud anymore, and so you won't have this vulnerability. Or the other thing you could do is kind of like don't back up your phone on iCloud. Like for example, I've got an iPhone as well, but I back it up on my computer rather than on the cloud. So and encrypt the backup as well. So the actual backup is sitting on one of my computers rather than in the cloud. Okay, that can be accessed simply with a password. Okay, so I don't want to scare you, but it's important that you understand all the vulnerabilities that might be, because some of them, you know, somebody might have done everything to keep their MetaMask safe, but at the end of the day, if your seed phrase is vulnerable, then you know, that's not safe. Because if you lose that, you lost your account. As simple as that. Okay, so just remember that, and this is important. So I'll copy this and put it in the chat box. Oh, come on, why? Sorry, just have to stop sharing for a second, because for some reason I can't type on the chat box while I'm sharing. Okay, start sharing again. Okay, so that's the one thing. Now let's go into the FTX. So, and this is kind of like, it took a while to understand what they were doing. But basically, there's two entities. One is FTX, and the other one is Alameda Research. Okay, so Alameda is kind of like a venture capital arm that it was fully owned by the two founders of FTX, so mainly from you know, Sam Bankman-Fried, and 10%, so 90% by him and 10% by his co-founder. Okay, so the thing though, what they did with FTX and Alameda Research, now you know, the FTX has got a token called FTT. You know, what appeared is that they basically, both between FTX and Alameda Research, the two firms control 86% of the supply combined. Okay, so this is the token FTT, and I know some of you may even have invested in the FTT token, but basically all of it, pretty much apart from 14%, was in the hands of the creators, of the founders. So, and then the FTT token went from 10 cents when it was seed price to $84, but because of the owners basically had most of the circulation of the tokens, it means that they can manipulate the prices pretty much as they wanted. Okay, now the only problem was that even when it went up to $80 and such, they were in a bind, in a way. They couldn't cash out their position because that would have crashed the price completely. So, and that's the problem we're having, kind of like all the tokens and not enough in circulation, because the moment you start selling, then the price starts going down, and going down very quickly. Okay, so instead of doing that, what they did, they used the FTT tokens to then deposit on the exchange and take out loans. Okay, so they use it as collateral to take out loans. Okay, so where did they get? Where is this cash coming out for the loans? The cash is money that's been deposited from users. So they couldn't sell the token directly without damaging their own position. So, but still, the token was valued at $60, $70, $80, so it was worth, you know, a lot of billions. Okay, and what they did, they just used that as if it was a good security that they could deposit as collateral and take out good cash against it. Okay, so there also is being used not just with them and with they exchange some of these FTT tokens with Genesis Global, which is another brokerage, which at the moment is in trouble as well. And so the effect is that many then companies that they interacted with in FTT tokens, and now those tokens are basically worthless. So these are the companies which generally can maybe other exchanges, maybe brokerages and stuff like that, have all got liquidity issues right now. So as you can see, what the effect of this is, it has repercussions all across the market. So everything worked fine until prices dropped in June 2022. Okay, So having firms that went bust like Celsius and Three Arrows Capital means that some of these firms that had FTT tokens, they could try to sell the FTT token to get cash. But now this cash was not available, just simply wasn't there. And so this is what caused the contagion then in the FTX exchange. The moment that the chairman of Binance then actually went public and decided to actually liquid, because that was one of the original let's say bankrollers of FTX when it first was created, and they had a lot of FTT tokens as well. So once they decided to completely get out of the project altogether and to liquidate the FTT tokens that they had in storage, the investor always, as he said it publicly on Twitter, then everybody was worried and they started selling the FTT tokens, and simply then it was realized then that FTX wasn't solvent. Okay, and so this is why then they had to file for bankruptcy. Now there are some repercussions just on, we've read some more about it, but there are some repercussions as well from the bankruptcy filings. So the main thing is, at the moment, the first thing, FTX agreed only a few weeks ago to buy the assets of Voyager, which is another exchange that had gone bust earlier on in the year. So obviously that cannot go through. So it looks like, sorry, no, wasn't, where is the Voyager? Okay. Binance is basically, looks like is going to bid. This is the bid that they lost to FTX a few weeks ago. So they're going to bid again, probably to buy the assets from Voyager, which itself is going through bankruptcy proceedings. Okay, and this is kind of like it's a good way to get very valuable assets and a very valuable customer base, because within bankruptcy proceedings they can buy just the good assets without worrying about the liabilities. They stay in the in the packaged bankrupt company, and it's important to understand that there are very few companies that are in a position now to acquire these assets, both the ones at the moment for Voyager, but also later on, once some clarity has been made on all the assets that are left in FTX, the FTX assets will be probably bought by Binance as well, because there are very few companies now. They have got the liquid cash available to be able to go shopping and get something that everybody would want, but many, very few people at the moment have the cash to do something like this. I mean, this is, FTX had bid 1.42 billion for the Voyager assets, which was, by the way, quite a lot more than Binance bid at the time. So they'll probably be able to get these even at fair discount to that number as well, because I don't think there's going to be anybody else that will outbid them. So you can see Binance is coming out really well from all this, because it looks like and this happens in any industry that is growing, will consolidate. So in the end, there's only going to be a few players that control certain parts of the market. For the central exchange market, definitely Binance is coming out like a winner of this war, let's put it that way, and it is slowly then englobing all its competitors and actually either buying them out or just waiting for them to fail and then picking up the pieces. Oh. Okay, don't know what's happened to the recording, but yeah, it started again. Okay, so let's have a look at a few other. So, by the way, what FTX was closely linked to Solana. So this is one of the biggest thing that it has affected has been Solana in general in price, but also recently both Binance and other exchanges have suspended USDC and USDT on the Solana blockchain. So and this is quite bad for Solana, because it basically reduces liquidity available on Solana, and even some in some exchanges actually have completely removed the USDT and USDC Solana pairs, like OKX, for example. Okay, so it's not looking great for Solana either at the moment, and we can have a look here on. I'll show you what it looks like in the chart. Let me do a bit more. So yeah, you get the picture there. Do I need to say? Do I need to say any more? You know, from 37 to about 14. So quite, yeah. What was that? Somebody can calculate very quickly. I'll do it here. So we're looking at a 63% drop, okay, in a couple of weeks. So in a price that already dropped from $200+ in the at the high to where it was now at 30 in the mid 30s. Yeah, it's quite a hard thing to take. Okay, so by the way, it's not that I'm telling you sell all your Solana, because the moment you are sitting at the bottom of the market, kind of like it's I would wait. If you haven't got out of Solana and you have some in your wallet, I don't think this is a great time to sell it right now. Kind of like almost like we have to wait a little bit, or at least another couple of weeks to let the dust settle. And because I'm not saying the project is still decent project. It's got some problems with it, but like a lot of projects do. It doesn't mean that it's worthless, but obviously it's been affected more than any other project by this FTX problem. So these are kind of like, and there's hardly anything else in the crypto news this week. Everything is revolves around this. And they got, this is what kind of like things that started to come out from the bankruptcy filings. So it says Alameda Research had about 5.1 billion in liabilities at the end of September. So this is before all this, but this is the actual thing. So the crypto assets borrowings are fair value. Okay, so this is a fair value. It means that it is what they considered fair value. So that may be maybe even a larger liability in their case once the market has dropped, because obviously the tokens they have would have lost value too. It's now all this debacle has caused a lot of rethink of how we check with the exchanges to see how safe or unsafe they are. Okay, so there's now Binance came out and started publishing like some of the tokens that they hold in reserve, and now a lot of other projects that follow suit. And this is what they call the proof of reserve. Okay, so basically is so proof of reserve is a cryptographic proof that says how many tokens are in your storage. Okay, but that doesn't mean that it's not telling you everything, because that's telling you just one half of the equation. So it tells you how many reserves you have, but it doesn't tell how many liabilities you have. Okay, because just imagine, like, if you say, well, I've got a house that's worth, I don't know, $1 million, but if if I don't tell you how big the mortgage is on that house, you wouldn't be able to tell what my equity is in that property. Okay, so it's the same thing here. Yeah, it's all well and good to know the reserves, but we need to know the liabilities as well to understand how solid a project like Binance, like Kraken, like Coinbase maybe. And this is a quite good. There's somebody that started publishing. And again, if you want, I can copy and paste this. It would be interesting to keep an eye on. If we're going to say this is annoying, it's annoying that I don't know what the reason is that I can't type what I'm sharing. Anyway, Okay, so it basically is reporting all the exchanges they publish, the proof of reserves, and which kind of technical system they use for this. So exchanges, lenders, these are the ones that already published. These are the ones that are announced it. The one that done it, lenders that are done it, like for example Nexo, etc., etc. And so the ones they are also stable coins issuers or exchange traded product issuers, etc., etc. And so these are the ones that publish proof of assets without liabilities, for example. So and this tell you exactly when the snapshot was taken. So it's quite detailed. So it will be a good place when you are thinking of depositing funds on one exchange. It would be good to to double check what the numbers are, and if they have published some proof of reserves or not. So this is why I posted that in the chat box. So I'll say these are kind of like another Genesis crypto broker, as well as frozen withdrawals. So these are kind of like the ripple effect I was saying of the FTX downfall. And I would say it would probably take a little while until these are completely out in the open. Okay, so this is what we don't know exactly. We can't make any plans right now on knowing when the crypto will recover. Sorry, I don't know what's going on. Why Barbara's iPhone is actually showing on this screen with these lines. I'm not quite know if you maybe Barbara, maybe you're sharing the screen as well. So just make sure that you log out of that. So this is can affect bigger institutions like the digital currency group, which by the other, one of the other things that it includes is Grayscale, and the Grayscale Bitcoin Trust and other assets. So this is one of the largest asset managers in crypto, and they've been involved in this. So we haven't seen everything yet, okay? But if they're affected badly, it could also have a further effect on the whole crypto market in general. Let's have a look. So on a slightly separate news, Binance is carrying on with their compliance and receiving licenses all across the world. This is from Abu Dhabi now. That Binance has financial services permission from Abu Dhabi global market. So it's not like a big piece of news by any means, but it shows you how much effort they're putting into being complying with regulation now. I don't think this is one of the other things that we have to expect out of this problem with FTX is that many countries will then want to regulate the industry. Okay, and in this case, I would say it's a good thing. It's not bad. Australia probably is the first one that came out saying that they will revamp the cryptocurrency rules after the collapse of FTX. Okay, so as I say, we can hope that the kind of approach to regulation is not extremely too heavy, because that will affect the the whole crypto industry for years to come. But I think some regulation, especially in some aspects, in terms of, for me, the two things will be stable coins and exchanges. It's overdue, because they are impinging on some banking activities as well. And so it's a matter of both making sure that people's assets are safe, but at the second time also about competition. So some regulation will come, and we'll have to see what the effect of it is in long term. Okay, other things that kind of to renew. I know sometimes it need to be said that this is a big problem. Obviously, we're all worried about it. But at the same time, the use cases, the crypto use cases, are still strong, and the work that's going on is still going on. these problems have happened before and will happen again in the future. But it's probably one thing that quite a few big players in the industry seem to think is that this should be like the last of the huge kind of like drops, in the same the huge players they have had problems, and probably now crypto can start rebuilding from here. But anyway, all the reason why to get involved in crypto are still there. That doesn't change simply because there is a bad player in this case of even if it's a big one like FTX. It doesn't change the whole idea why what crypto is good for. Another interesting part of it is this the links between the founder of FTX and the Community Future and Trading Commission and the SEC. Okay, now there is kind of like a growing concern and a kind of investigation that needs to happen to because he was also helping them, being a consultant to develop kind of like a legislation on crypto, and this is some of the people that used to work for the this is the Commodity Futures and Trade Commission, by the way, CFTC. Have like former employees of the CFTC have been employed by FTX, so there are some questions that need to be answered, and also he appointed Caroline Ellison, CEO of Alameda Research, and Caroline Ellison, Glenn Ellison, which is her father, used to work very closely with Gary Gensler at MIT. So it's kind of like, I know it looks like, when you look at it from the outside, and knowing, I don't really know any of these details, okay? But it looks a lot like the old boys club. I know him, he knows her, and so on, is the father of this, the daughter of that, and people keeping it in the family, so to speak. So there will be hard questions that need to be answered there as well. These are added, so there's lots of articles, guys, that you can get. You can get that, but there are a lot of loans between, let's say, FTX and Alameda Research, and then Alameda that actually then loan money to the founder of FTX. So it's kind of like at the moment a real shit show, if I so describe it in a technical term, and there is more and more of this dirt that's coming out. It's coming out every day. So feel free to to read all these articles if you want. It won't be very encouraging for your crypto future, but it's also important to understand what some of these guys have done and why regulation will be coming and why it is actually will be welcome when it does, in a way. On slightly just two different things. One of this is the good uses for crypto and for blockchain. This is like the Tuvalu Islands. Some of you might be familiar. I don't know, some of you in Australia have actually visited, probably. They are very vulnerable to climate change and to rising sea levels. What they decided to do, they have decided to basically preserve its history and culture on the blockchain. And this is one of the places obviously the blockchain is ideal for, because it's a permanent record. So in certain cases, like for example in Russia, is being used to actually publish articles that the authorities don't want published, because there's no way to delete them once they're there. Okay, and so in their cases, because they're worried that the whole country might disappear by rising sea levels. At the moment, apparently 40% of the capital district is underwater at high tide. Can you imagine, rising the sea levels, rising by, a few inches might mean really that people are pretty much living underwater half the time. So not a nice thing to think. I mean, I know it's a small country with only 12,000 population, but still, they're taking this step that at least they were going to have a permanent presence, let's say, on the metaverse to preserve the history, culture, landmarks, and so on. So they're becoming, in a way, this is what they say, the first digital nation. Okay. But the other thing that also I wanted to share with you is the actual bond market. Okay, because sorry, let me I'll stop sharing for a second. I'll reshare because I've got these marks on my screen that are annoying me. Okay. So, and this is kind of like, what we're saying, looking at the future, looking at the charts, when will the market turn around, so to speak? When will they, from monetary tightening, go on to monetary easing again? And this is important to see what the market is expecting. So now it seems to think that the market implied Fed funds, they point towards a long pause rather than a sharp turnaround. Okay, so now the market is thinking that it should peak at about 4.9%, the interest rates. Okay, but then I think instead of starting going down quickly, they're looking at they will stay basically at above 4% for the following 12 months. Okay, so that's the thing. Rather than kind of like, that if you look at here, we look at something. So look at the indices and S&P 500, for example. We go into a daily chart. So instead of expecting kind of like a sharp, maybe doing it even with a weekly. So you can see it's been quite a sharp drop in 2022. So the blue line is the end of 2021. Okay, and quite sharp. Instead of seeing probably a sharp recovery, it's probably going to be a more gradual growth over time. But in general, when I say the one thing, even if you're not technically minded, you don't want to spend your time looking at charts or looking at kind of expectation of bond market rates and so on. The one thing that you can keep an eye on is the US inflation, because that's key to everything else. Okay, so we will see the markets in general starting to recover once the US inflation starts seeing signs of being under control. I mean, being under control, it doesn't mean going back to 2%, but even coming back in the 4 to 5% range, because that means that the Fed will stop increasing interest rates quite as rapidly as they have done since now. So they will start tapering down, and until they kept a certain level before they start going down again. So the market is waiting for some certainty at the end of the day. So this is what the market thrives on, knowing exactly what's going to happen so they can plan accordingly. Okay, so what they are waiting for these interest rates to slow down or stop altogether, and then we'll see a gradual growth in the market. Okay, everybody a few months ago, they thought there was going to be like a sharp pivot, so kind of like a point where the market turns around. Now the expectation is slightly different. Okay, more like a gradual curve bottoming out and then start a gentle upward curve rather than a sharp growth all of a sudden. Generally speaking, we are looking at I will say towards the middle to the end of the first quarter next year, where we'll probably see the interest rates this month should still probably go up, but not by 0.75 of a point, probably by only half a point. And maybe in kind of December, January, we might have actually had no increase, or maybe just a 0.25 of a point there. So it's kind of like the idea would be much clearer by the let's say beginning of January, and we might see then a growth start, slow growth in the markets since then. So not good news, I say, in the very, very short term, but if you want to hold on for another month or so, a couple of months, then we should start seeing some green shoots, I'll say beginning of 2023. Okay, so at least I end on a good note, let's put it that way. So let me stop sharing now. Okay. Let me see if there are some questions already. Sorry, Kim, at this time of the year, would it always be done? So what are you referring to? So I don't know what I was talking about at the beginning. No, Kim is not here. Okay.
Yeah, like at this time of the year, wouldn't manufacturing they wouldn't start gearing up until January anyway. So doesn't it slow up?
No, not necessarily, because manufacturers like start producing like 6 months in advance generally.
Okay.
So,
So we'll be looking at what kind of book, their order books, how full they are or aren't.
So yeah, what really happened in 2022 that most manufacturers actually filled in their reserves and their warehouses. So they got to the point now where they got, their demand is not growing, and they got enough stock to cope with, the future short-term demand. So they basically now they're starting to cut down their output. So that's the thing. That's the outlook. Because it doesn't make any sense for them to, produce more and then to have to pay even more money to store it and to have to get new storage, etc., etc. Okay, so that was the referral. Okay, why most traders on FTX and not on Binance? It's Binance. It was FTX made things very easy for traders, and also he had a very young crowd. Okay, so they spent a lot of money on advertising and attracting numbers of people that maybe, they're not particular crypto people, but just people that just want to make money. Okay, so they made that transition very easy for them, and it was very popular with a lot of traders to be able to do different things on FTX. It was kind of less clunky than Binance in many ways. So that's why traders liked it. But now a lot of people are stuck with funds in there. What are the risks of grayscale? I mean, that's at the moment. Again, these things are coming out with the filings in the bankruptcy proceedings. So because now many hedge funds had funds on FTX. So if they can get these funds out, obviously it affects either the bottom line, but it depends then on how deep their pockets are. So what percent? So it depends, are they liquid or not? Because obviously these people are not in the business of just keeping the money sitting somewhere. They just re-employ to produce a yield. So how if they start having a high demand for people coming out of these projects, do they have the liquidity to then pay people off? So those are the questions. This is the questions on many different things. Kind of like, in a way, Eric was saying, sorry, the last question, no news on Cardano. That's probably a very good thing at the moment, because in the sense that Cardano is pretty much being an island of being completely outside of this debacle. It hasn't been involved at all. It's been a refreshing thing that people are not talking of that way, Cardano in connection with FTX. And it is actually the good thing about Cardano so far, that it's being almost, people are seeing in a different light, because it's almost like when there was all that hype going and all the FTX crowd, and and FTX was paying for Super Bowl adverts and sponsoring football stadia, etc., etc. Obviously everybody's listening to whoever's got money to spend, but the people that are doing the good work are normally almost like in the background, being ignored until you realize that good work is important. I think this is what's coming out of more than anything from the Cardano community. I'm thinking, guys, it's nothing has changed for us. We're still carrying on as normal as we've done for these past few years, and things are actually looking quite good on Cardano, rather than all these projects that have got problems. So, Jonathan, any specific last minute news on Cardano you want to?
Yeah, there's a sort of representative activity on Cardano versus the rest of the pumped VC venture capital markets. Charles asking, well, there was a leaked early press release from Scottfest, which is happening tonight at Edinburgh University. Charles Hoskinson IOG are giving £2 million to the university to continue their blockchain research. So, it's typical of investing in academia, in the fundamentals of blockchain technology, as opposed to investing in get quick rich schemes. And this is, it's all the way throughout Cardano's architecture, the management level, the builders, the community. They're all blockchain technology minded as opposed to financial crypto minded. And if you can have the finance following the tech, then that's a better way around. Put the horse before the cart rather than the cart before the horse.
Yeah, I think it's important as well to understand, and because a lot of people do go and look, okay, is a project at VCs funding or not? And in a way, the whole structure of Cardano is built so that projects can be funded from the community rather than from VCs, which at the end of the day are only interested in making a lot of money out of a project and not so much interested in the long-term viability or how good the project is doing, for the community and for the world. So, and the whole structure of the Cardano funding with the Catalyst system is, I think, excellent, because it removes all the uncertainty about the people are just supporting a project for the wrong reasons. And also the other thing that's important, because in crypto it's like community is king. Okay, so when you think, and when a community is actually voting and is giving money to what most people want to support, you think, and then the people will actually use those projects that they are just voted to give money to. So obviously they will, because this is what they wanted. They have made the decision to give money to this project rather than that one. So when that project does well and then it comes to market, obviously they will support it, because everybody feels that they got an emotional connection. They think, actually, I voted for them, for them to receive funding, and now they're coming to the market. So that's very important as well, because it creates interest, let's say, behind project even before they are ready to come to market. So when they're still at the planning stage, when you still have maybe only a couple of developers working at something, but people love the idea, they're already invested in the idea even before there is a product available to buy or to invest in. So I love the structure of this, and also that every round the fund to share becomes bigger and bigger and bigger. So there's a lot of money, isn't there, Jonathan, to share the love.
Yeah, well, they've actually capped it now in the last couple of funds to $16 million. So that's all you're allowed this quarter, which is still at least plenty of money to be pumped into community projects. And in fact, Fund 10 is being reviewed. They're bringing the whole delegated representatives in so that because there's 1,000 projects out there building. A normal human can't fathom them all. So they're working really hard. This is the era of Voltaire we're entering into now, where they're all about moving the control of the blockchain over to community, a distributed community. So that's the funding, treasury management, the parameter changes on the blockchain itself, and all to do with the Catalyst project. How the money gets distributed is all being reviewed and worked on. So they're building up to create a voting platform that can be used for nation states as opposed to just small projects. So they're really working on humanity's experience of life changing type things. It's good stuff. Vision is big.
Do you know, Jonathan, the numbers of how many actually wallets participate in Catalyst voting? Numbers.
I did see that recently. It was up again this last fund. 60,000 comes to mind, but I can't be confident in that. I do know that as a consequence of the FTX crash, the creation of wallets on the Cardano blockchain increased 400% in that week. So it just shows you that the smart money is moving towards the more stable, secure, dull chains.
Yeah, no, definitely. And one thing, if one positive we can take out of the FTX bankruptcy is that now the decentralization is being valued a lot more. So people are realizing how important it is. So obviously some projects are, I'll put that at the center of their operation like Cardano, but, and that was, one of the things that Ethereum was really proud of before the merge, of being highly decentralized. After the merge, they're not at all. They're very highly centralized. So it would take them years to achieve any level of decentralization that's anywhere near the one that Cardano can boast right now. So, but decentralized. So everybody's realizing how important it is that, because when you centralize something, you also centralize risk. So there is, like, again, we always talk about whether it's your own portfolio or whether it's a company, it's important not to have a single point of failure. So like something like this, like FTX, it was really a single point of failure because it was so much concentrated on the founder. So much of the power, so much of the tokens, and so on. So one thing goes wrong and everything drops. In a decentralized system, you can have one node just disappearing and the system carries on as if nothing happened, because the load is shared by thousands of horses that are carrying the cart rather than just one, so to speak. So it's the one thing is I think that decentralized projects will actually come to the fore. So in both in the terms of all blockchain, but also wallets, not just Cardano, but in general. Another one of the tokens that has done really well, for example, is Trust Wallet. Okay, because again, people are thinking, look, we can't trust exchanges. We need to find a solution to, store our tokens offline. So Trust Wallet was one of the best solutions. So we've seen, Cardano Wallet, Trust Wallet, MetaMask, everything has grown in the numbers of interest. People being interested in it after this because people realize how, we want them their funds to be kept safe. So that is the case. Okay. Any other question, guys? We're over time. And Jonathan, as usual, please put your link to your session. Jonathan does a session on, for those of you that are new, maybe are here for the first time. There's a few names here that I don't recognize. So if you haven't before, Jonathan runs a session on Cardano on Discord at 9:30. So I highly recommend you to follow it, because the more you know about Cardano, to be honest with you, the better it is, as you will see over the next 12 months grow in relevance, Cardano, in the whole ecosystem in general, in cryptocurrency. So knowing how it works and the opportunities that are available, I think is very great. And Jonathan does like a free session like that every Friday following this, so you can have a double whammy. Okay, you can come on this first, have a half an hour for a cup of tea and a piece of toast, and then log into Jonathan's as well. Okay, fantastic. Unfortunately, I can't be on it today, Jonathan. I go back-to-back meetings, but I can when I can. I'll make an effort to be there. Okay, any last minute question, guys, or shall we adjourn for another week? Oh, sorry, sorry, go on. What was that?
Yeah, the Tim Luca. I was just noticing on the IAW calendar, it's shown as starting at 2 hours before you actually did start the session.
On the IAW calendar, well, my session.
That's right.
Oh, I need to check. I can't control the IAW calendar, unfortunately. So I need to ask Paulina Tyrell to look into it. Okay, thank you for letting me know. And for those of you that are in my mentorship, by the way, so they are in AIW and they come to my sessions every Monday. I just wanted to announce that from Monday, because so many people have asked me and so many people are interested in it, we are going to start a trading course. Okay, this is a proper trading course that will teach you it will take several weeks to go. So it's not going to be like a 2-minute things, but we'll have half of the session, we have a 2-hour session every Monday. Half of the session will be dedicated to teach you to trade properly. Okay, so how to find where demand and supply is, what are odds and answers, and doing proper what I call proper trading without all these squiggly lines on it and all things, all this rubbish about indicators and stuff. Okay, so how to proper examine price action. All right, and I think that this is important for me because it's not just, this is not a skill that is connected necessarily to crypto. Once you learn to do to analyze a chart, you can use it in any market. So whether you are trading stocks and shares, commodities, futures, options, forex, whatever you're doing, you can use these skills anywhere, because it basically is, is learning how to properly analyze a chart. So whether you're trading apples or you're trading Bitcoin, you can use the same techniques. Okay, the same system. All right, but it won't be. So I won't give you like a one click. So do this, and whenever you see this squiggly line doing this, you buy or you sell. It's not going to be like this. It's going to be proper level analysis, and you can use it if you want. And there are ways also show you ways of doing your practice, because you will need to practice a lot. And there are ways, there are accounts where you can do it, because I always encourage to do any trading with real money, not to do it with paper accounts. They don't teach you anything really. Okay, starting on Monday, Belinda. So I will encourage you to do it with real money, but there are ways of doing it with little money. So you don't need to put a lot when you're learning. But the thing is, one of the things of trading is having a position, and having your success then teach you how to increase your position over time. But you need to prove to yourself, rather than to me or anybody else, you need to prove to yourself that you are able to read the markets properly, to enter and exit trades properly. And once your success, as you can see this with a certain constant, then you can start doing the same thing, but with a little bit more money in it, and then with a little bit more money in it. And you'll find your level eventually, because you reach a level where you're thinking, actually, that's kind of like too big for me. And so you reach your ideal position, trade position as well. And then it's something that you can do as often or as little as you like. It's not, trading is something, there are so many different styles. You can do it, a very long term. You can do it on day, literally trading on charts that are changing every second. So there is a big range, but the skills are the same. And then how you apply them to that depends on you, or your circumstances, your characteristics and so on, but the skills that we'll be learning will be the same, applicable to many different types of tradings and time frames. Okay, so just remember, if you're not able to, I know that not everybody is able to come to all the sessions because of all the obviously time zones that we have. So make sure that you then listen to the recordings if you can be there on personally, and also make sure that before the next session that it's not going to be too hard. You don't need to spend days, but you make sure that you do the homework, so that you can. Otherwise, you won't absorb everything if you just watch a recording and you don't try it out on your own. So make sure you do the recordings and do the homework. Kim, I'm not quite sure if you are. Sorry, it's on my Discord channel. I'll send you a message. I'm not quite sure if you are on my Discord channel or not. I can't remember. But if you're not, I'll send you a link to the Discord, to my Discord, and then you can join it. And the link is in there.
Is that kid? Did you say Kim or Tim?
Kim.
Yeah, I want to as well, because I can't find yours as well. That's why I talked with you.
I'll send you. Okay, I'll send you a link as well, Kim. No problem. Sorry, Tim and Kim. Sorry, Tim and Kim. Okay. I'll send you both links if you're not there already. Okay, guys. And if you're not part of AIW but would like to be, following my trading course, then just give me contact me here. I'll just put my email address. Okay, and we can have a no obligation chat. Okay, so if you want to have a chat with me and find out what we're all about and what we do, we can have a chat over Zoom. And I'm not, one thing that everybody can tell you that's already part of my group, I'm not a salesman. Okay, so I don't do hard sales. So if it's something that works for you, that you want to do, then I can tell you how it works. If it's not, then we part as friends. No problem at all. Okay, so have a great weekend, everybody. I look forward to seeing many of you on Monday evening. I say when we start these trading classes as well. And yeah, in the meantime, enjoy your weekend, and watch the crypto markets, but not too closely. Okay, don't worry too much about that. All right, see you all. See you next week. Bye bye.
Thank you. Bye bye.